After years of being out of the real estate market, my wife and I bought a home in June. We're excited about starting a new chapter in our lives, and we're looking forward to a more engaging lifestyle, one that includes entertaining friends more often, making extensive use of a home gym, and moving to a more relaxed, friendly residential environment. The choice was not made on financial grounds. Rather, being homeowners was a lifestyle choice that we both actively embrace. I remember discussions about real estate a couple of decades ago where people would counsel young, first time buyers to stretch their budget to the most expensive home they could afford and then pay even more if needed. That is, to say the least, rather reckless advice. But for about a generation from 1995 to 2020, that's what many people did. Except for the people who bought a home relatively recently in the aftermath of COVID 19 from 2020 to 2022, most homeowners did very well, especially since interest rates, and therefore mortgage rates, were dropping steadily throughout that time frame. All asset classes move in cycles, and real estate is no different. When inflation began to look like it might be out of control in early 2022, central banks started raising rates with authority. Given that there had been a 40-year-long bull market in bonds, and therefore in real estate, due to rates dropping from all-time highs to essentially zero, some people were genuinely surprised to learn that rates could go up too. When considering the money that previous homeowners put into our new home, I've calculated that we got it for about 10% less than what they paid for it 5 years ago. Now, that said, I fully expect that our new home will be worth even less at the end of the year. I don't think we've hit the bottom of the real estate cycle in Toronto, although I suspect we're getting close. Again, while we were mindful of valuations, the decision was based more on lifestyle than on finances. Over the years, I've encountered dozens of families that are house rich but thin on financial assets. Many of these people say things like, "My house is my RSP." While it may have worked out relatively well for many of those people, that approach is unlikely to yield similar results for the next generation, and possibly for any generation ever again. Relying on having the ability to tap into home equity isn't a retirement plan, it's borderline all or nothing bet for one asset class. Other than your human capital, which is your ability to earn money over the course of a lifetime, your residence is likely to be the most valuable thing you have. Having a home that is at the margin of what you can reasonably afford is a clear example of concentration risk. The most important concept in finance is to diversify to manage risk. Putting more than 100% of your net worth into any one thing is risky. And because most mortgages are for more money than most people have in the offsetting assets, the decision to be a homeowner should involve at least a moderate amount of reflection about your attitudes toward risk. You and or your spouse should have at least one stable career between the two of you. You should be prepared for other costs too. Land transfer taxes, closing costs, property taxes, maintenance costs for both the home and the property around it. People have run the numbers, and it usually works out to being a wash, where owning and renting battle it out to see which is the better long-term option financially. The statistical tie is what we get even after taking into account the lifetime capital gains exemption on a principal residence. I've had a friend on my podcast who represents Home Equity Bank, the pioneer of the so-called reverse mortgage. While imperfect, the option does allow for some flexibility that didn't exist previously, so it's a viable option. Still, now that interest rates are rising, the reverse part of the offering means you'll be eroding principal more quickly than you would have had you pursued the same option only a few years ago. And rates are very likely to stay at current levels, if not go higher, in the future. In the end, my view is that if you enjoy being a homeowner, then go ahead and buy. If, on the other hand, you could take it or leave it, there's absolutely nothing wrong with continuing to rent indefinitely. If lifestyle matters to you, decide based on lifestyle. If you're indifferent to lifestyle considerations, there's no reason to rush into homeownership.